Hello and welcome. This is the Insurance Pro Blog Podcast. This is episode 434. I am Brandon Roberts.
And I am Brantley Whitley.
And you are listening to the internet's favorite podcast about life insurance.
And we're actually going to talk about life insurance today.
Oh, are we ever?
But probably not the part that you're interested.
The internet's favorite little podcast about life insurance and statistics found some statistics about life insurance, and we are.
We're here to deliver. Well, we figure no one's listening during the summer anyway. So might as well talk about statistics.
Yay.
Yeah.
The numbers are in, and life insurance is popular now.
Hey. All they have to do is wait it out. It comes back around.
Let the cycle do its thing. It is stunning what's going on. And I will tell you without seriously vetted numbers, there's a feeling within the industry to me that there is way more excitement about life insurance, the industry, and the products that it brings to the masses than I have seen in a long time, possibly ever.
Yeah, I agree with that.
So let's do the numbers.
On the upside, from an anecdotal perspective, we're seeing some modernization that's been needed for a long time.
I have some commentary on that, actually.
And some innovation in products, which we haven't. I'm not saying we've had innovation in whole life products. Don't get too excited. But in other life insurance focused, long-term care, life insurance hybrid stuff, seeing some, and definitely in the underwriting side and speed of getting things done.
Commentary to be had on that, but let's do the numbers first. Then we'll get into the segment of the show where we just
you got to hold out for the interesting stuff. We're going to hit you with the statistics.
Yeah. So because we are where we are in the year, we have the first quarter of 2025 numbers all wrapped up and done. And LIMRA has given us the stats on what's going on in the industry from a year-over-year perspective, also comparing the beginning of 2025 to the beginning of 2024. So here's what we can tell you. There's an 8% increase in sales year-over-year for the entire industry, which is a humongous number.
That is big. I mean, when you think about how big the life insurance industry is.
And how boring.
Yeah.
Growth like that when you're big and boring is impressive.
I mean, we're almost at double digits.
Yeah. That's not something you would see from an aged industry like insurance.
Right. Yep.
Indexed universal life insurance sales year over year for the first quarter of the year, 11%.
Yep.
11% growth, 7% higher sales finishing out Q1 2025 versus Q1 2024. So growth all over the place. Indexed universal life insurance comprises like 24% of the overall market share of life insurance sales, which is substantial.
Yeah.
The big growth.
I should say.
Yes. Yep. The big growth story, the interesting growth story is actually variable universal life insurance. 41% year over year growth.
That's incredible.
That's insane. Insane. It now comprises 14% of the life insurance market. I remember back when variable universal life insurance was like 6% of the life insurance market. So
been a lot of innovation there, though.
Yeah, there has. A lot of innovation, and I would argue it's the introduction of certain indexed accounts that has made variable universal life insurance more attractive.
That was the innovation I was thinking of.
Yeah.
So, I think the fact that they can do some of the things that IUL can do, and in some cases do it better.
At least seemingly better.
Yeah, I mean, we don't do that. We don't. I just know what I'm told. So,
right. Whole life insurance, a far less impressive growth story, about 2% year over year growth, which not surprising. Product hasn't really changed a whole lot. Still growing though, which is interesting to speak of, and almost 40% of the life insurance market. We knew that it's always been the largest piece of the pie, and not shrinking, which is applaudable. Term life sales basically flat. I think it was 1% down year over year. Big deal. Nothing particularly remarkable happening there, and something that comprises roughly 20% of the overall market for life insurance. So term sales, I think, for a number of people are a little bit disappointing for those of us who've been around for a little while. So I would say if you are maybe 40s and a little older than that, you remember a time when term life sales were like bananas because we had a mortality table update.
Mm-hmm.
And it turns out that everybody was paying way more for term life insurance than they needed to be.
Yep.
So there was this massive multi-year period of everybody buying new term life insurance because they were saving like 25 to 50% versus what they had been paying all along.
Right.
That ended. The most recently updated mortality table didn't come with a change in expense structures quite as dramatic. So we're not seeing that big rollover again in more new term life sales.
Right.
And then the fixed universal life category, which is the old universal life, also comprising guaranteed universal life. Sales dropped a little bit. Not a lot going on there these days. Still
well, no one's making
about,
new products, really. I mean,
yeah. It's all going
especially
in the
not on
category.
I guess on guarantee. I was going to say on the current assumption UL or fixed UL, nobody coming out with new stuff. On the GUL or guaranteed side, kind of the same.
Yeah,
as far as I know, anyway.
No, it's regulatory changes make the product more expensive for insurance companies. So
and a lot of them figured out they underpriced it to start with. So
yeah, not as much interest there, and only represents 6% of the overall life insurance market. So small piece of the pie ultimately.
Mm-hmm.
But it is fascinating for me. I'm sure that's a stretch in terms of the use of the word fascinating, to see how much interest there is today in life insurance, specifically cash value life insurance. Because you and I have been around for a while, and we have observed the various opinions that have been floated about on the TV, the radio, the internet about life insurance. And there are some very loud speaking people who are, somewhat negative on it.
Somewhat negative. That's pretty funny. You mean screaming into a microphone? It's stupid. They're trying to rip you off. That's somewhat negative. Huh?
Yep. That's
You're pulling punches today. That's all right though. No, I understand what you're saying. Yeah, there's been a massive look, for as long as you and I have both been alive and on the earth, there's been a campaign
to
get rid of cash value life insurance. And it did seem like in the, I don't know, 2010s, if we want to call them that. That movement really picked up steam, and probably more because we saw it. Like, it's anyone with a microphone and a camera is in the media business now.
Yeah.
So,
including us. Yay.
Right. Yes. Present company included. And so there was a lot of talk about it. And, prior to 2022, everyone thought the market could do nothing but go up. So why would you do anything but that? So I feel like that's all baked into the equation. And with interest rates having gone up over the last several years, everything looks better. Any fixed product that's based on some sort of fixed interest rate, has looked way more attractive. Obviously,
it has. And there were a number of those people who speak loudly into the microphone about how stupid life insurance is, who more or less called for the gradual decline and death of whole life insurance and universal life insurance.
Yeah.
Like, to them, term insurance was all that ever mattered. That's all you ever needed. And why would you put your money into anything else but the stock market? And look, I'm not saying there aren't people putting their money in the market.
Sure.
And there are, and there should be. But the life insurance growth numbers speak to an interesting shift in focus.
Yep.
Like, those people are still out there saying it, but not everybody's listening.
Yep.
And
agreed.
it's fascinating how much effort has gone into tearing down products like whole life insurance and now indexed universal life insurance. And this isn't just the 2010s, 2010s timeframe. This goes all the way back to the I think Waddle and Reed gets the sort of initial buy term and invest the difference sort of origin story. And their inception goes back to the 70s, 60s, 70s, sometime in that frame. And then you've got what ultimately became Primerica becoming the next big voice in that. Again, this is 40 plus years ago, inception. And everybody who's come along since then who thinks they're adding some new idea to the table is just regurgitating what they said all along.
Yep.
And despite all of that, cash value life insurance is alive and well. Like a really, really alive and well. I pulled some additional numbers on search volume for various life insurance categories, comparing what they changed over a 10-year period. And they're up hugely. Like whole life insurance has 3 times the search interest it had 10 years ago.
Yeah.
Cash value life insurance 9 times. Indexed universal life insurance 5 times. Variable universal life insurance 34 times. But to be fair, like the search volume back in 2015 was like 200 per month.
Yeah. That is pretty incredible. Unfortunately, no one needs a website anymore because Google just tells you what it is right there at the top. So
yep, there's that.
People like us are like, probably not going to put a whole lot of effort into publishing written content.
No, but definitely going to take note of the fact that this is a growing subject that people are out there looking at. And, you know, I've had a lot of conversations with people recently who are admitted by term and invest the different former
disciples,
advocates.
Acolytes.
Yeah. Like that was what they believed. And then they sort of lived life for a little bit and realized, there are some things that might miss. And they're a little regretful over the decisions that they made and the time it took to get to where they're at now, to now want to look at permanent life insurance. But they've arrived here. And it speaks volumes about something we've been saying for a while, which is, listen, let's take whole life insurance as an example, or let's do what we commonly do and say whole life insurance, but we really mean all the forms of cash value life insurance. You can look at it and you can criticize it individually for any one thing that it doesn't master.
Right.
Like the cash accumulation, it's not as good if you just bought a passive indexed ETF.
Right.
True. I'm not going to argue. It's not. But if we look at all the other things that it does, so it does accumulate cash and it does it in an incredibly stable way. Like near guaranteed to near guaranteed growth every single year.
Right.
Death benefit, that's something. A plethora of just extraordinarily attractive tax attributes. Great amount of liquidity, quick liquidity, and an immense amount of flexibility in terms of how much money I can put into it without parameters like, I can only put $6,000 in there per year. Or if I withdraw the money before 59 and a half, I have problems. None of that exists. So when you put all of those things together, it's impossible to have some other asset that checks all those boxes.
Yep.
And that's the part a lot of people miss. Yes, you can go out and buy a passive index fund and you probably will accumulate more money. But there's all these other things that life insurance brings to the table that you're not going to have.
Yep. I agree.
That to me is what people have missed when they advocate against it. And I strongly believe that a lot of the negative sentiment lobbed towards life insurance, whole life insurance, index universal life insurance over the years, especially as we get to that 2010s time frame that you brought up, it was really born out of a number of financial blogs that always try to monetize. And the easiest monetization in the life insurance space was generating leads for term life quoters.
Very lucrative.
So they all had an opinion about why you shouldn't buy cash value life insurance, which wasn't some thoroughly vetted, thought out, extremely good, oh, I looked at it and I don't like it. It was, if you buy cash value life insurance, you're not going to buy term life insurance. And I don't get paid if you don't go through the link here to go get a quote for term life insurance. So you don't need whole life insurance.
Yep. You're right. It's cynical, but it's true.
I mean, I don't know now because nobody reads blogs anymore, but it's back not that many years ago, it was certainly the case when you looked at those anti-cash value life insurance blogs, they were very, very frequently peppered with links to term quoters.
Yeah.
Don't buy whole life insurance. Term life is cheaper. Click here to get a quote.
Yep.
Now, the growth in sales, really, if we look at it over time, there was stable growth leading up to COVID. Then there was a sharp increase in growth following COVID.
Mm-hmm.
And part of the story has been, people were more in touch with their mortality because of COVID, which, okay, that believable story. But there's something else that happened that you mentioned earlier that I think has led to an immensely higher amount of sales in the life insurance world, which is something you and I were pleading with the industry to do back in the 2010s. And that is, the insurance industry had to figure out a way to work remotely.
Yep.
So we entered
all the things that couldn't be done all of a sudden got done in 2020.
We entered an era where now the streamlining of doing things electronically suddenly became a priority to the insurance industry.
Yep.
Because the face-to-face sales process that it had leaned on for years, decades, wasn't going to work in the era of social distancing.
Yep.
And once it was all done and we could go back out and we could come within 6 feet of each other again, it turns out there's an ease to doing business when you decide, well, even though we can meet, if we don't, we'll get things done faster.
Yes. I remember talking to a friend who lived in a major metro area in the country. Mm-hmm. And he said, my clients, we were talking about that whole transition during COVID for most people. You and I were doing this pre-COVID. And it was, our process was clunky at best, I guess, back in those days, because we just didn't have the tools.
And we had a lot of resistance. And we had a lot of resistance from insurance companies.
But this guy was telling me that he was like, I thought I would, go back to meeting with local people in town and stuff like that. Like, everyone liked it so much because, he's like, there's parts of town that even though we're in the same city, it could take people 30 to 45 minutes to an hour to get to my office because of traffic, depending on time of day and all that sort of stuff. He's like, nobody wants to come to the office anymore.
Nope.
Like, aren't you glad you dropped like $100,000 on that office renovation that you did? Because that was money.
Well, you can sit there and enjoy it.
He couldn't predict it. He had no idea, obviously, but
well,
it's interesting.
I mean, backing away from the insurance industry, which had long overdue, very needed updating of things, it did take place. But just think of, I remember using Zoom in like 2017.
Oh yeah.
And when you sent someone a Zoom link, they're like, "What's this?" Now, everybody knows what to do.
Everyone. Yep. I've not had anyone had problems with that in years. No matter their age, by the way, because usually people have some bias. They're like, well, younger people will get that. No. Grandma and grandpa get it too.
Yep, they do.
Because they do
the link.
What we found out was like, oh, well, they were doing all their doctor's appointments and everything else.
And they very rarely show up on screen as a cat.
That's right.
Other things that have been going on though. So the independent channel, the one you and I exist in, is now the dominant distributor of life insurance, which wasn't the case 10 years ago. The majority of life insurance sales took place from career agents.
Right.
Selling the company's product.
Meaning people who primarily work for one company.
Yeah.
Yeah.
Now it's shifting to be the channel you and I live in is the one that distributes more of these products. In fact, index universal life insurance, 90% of it is distributed through the independent channel.
Yeah.
And I always said
believable.
that the independent channel tells you what the consumer generally is willing to buy. Because yeah, we can do the whole life insurance is sold not bought thing, whatever. But like, there's only so much you can get done by trying to tell people they need to buy something. Eventually, there's going to be a certain trend of those looking at it and going, yes or no.
Right.
And we know from years ago, just looking at individual companies that were open to the independent channel and seeing how much of specific products were sold independent versus career, the ones that had better products did sell more of that product through the independent channel.
Yes. Yes.
The other thing that has happened is a significant broadening out of the cash value life insurance product in terms of who's buying it. Mm-hmm. So you and I, from the inception of the Insurance Pro blog, have focused on the use of cash value life insurance as an asset for people to hold as a diversification play.
Yeah.
The majority of what we do each and every single day is help people design and put in force whole life and index universal life insurance policies that are cash accumulation focused policies.
Right.
That's 100%. What we primarily do, which for years was kind of a little bit against the grain-ish in the sense that most of the permanent sales were largely about wealthy people trying to deal with asset transfer.
Yeah.
Providing liquidity, whether it was to pay estate taxes or some other thing, that was where the majority of sales were taking place for permanent life insurance.
Yep.
That has begun to broaden out, and now there is a big portion of sales that are taking place middle market, people buying whole life and index universal life insurance, largely because they want a diversification play within their portfolio.
Absolutely. They've got the 401k, they've got all these other investment vehicles or tools that they're using, which is fine. But they like what life insurance brings to the table for a portion of their money.
And there's a guy in Tennessee slamming his fist on the table saying, no, 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 no. And too bad. They're not listening.
Yeah.
And they shouldn't listen. It just remains a bit mind-boggling to me. And I'll admit here publicly that throughout my time in this industry, which is just about 20 years now, there have been moments, numerous, where I kind of challenged the thought process and asked, like, is this really a good idea?
Mm-hmm. So you're telling me you changed your mind and you don't?
Yeah, we're done. We're going to close it down and let you guys know you shouldn't have done this. No, but there, you know,
you didn't fill me in beforehand, people. I'm learning this live.
No,
I'm out of business. Okay.
Finally going to start that laundromat and ice cream center.
Yeah.
So
2 in 1.
So there just been, you kind of, you want to stress test the idea to say, okay, is it really as good as I think it is?
Mm-hmm.
And thankfully I'm still here because every time I really test it, I come down to, yep, it's something worth doing. And over all these years and all the things that have been said and all the attempts to suggest, oh, it's old, it's stodgy, it's dying, it's alive and it's doing better than ever.
Yep. That's, you know, I talked about anyone with a camera and a microphone is in the media business now. I think that has, not just in the life insurance industry, but has helped in so many ways. I mean, it's annoying at times, don't get me wrong. There's bad that comes along with it.
Yep.
But the good is that it has further segmented and divided knowledge. And I mean, look, what we do is not right for everyone. And we'll tell people, like, this isn't for you. Mm-hmm. Like and that's not a judgment about you or your character or anything, but this is not the right tool or right strategy for everyone to use.
Right.
So, you know, that's a case by case sort of thing. But for the people that are interested, there are ways for them to talk to each other now and to communicate and to learn and to go deeper. And that's on a whole host of subjects. And to me, that has sort of a meta view of we're broadening, we're spreading out, into smaller groups. And I don't mean we should like hate each other sort of groups, like,
yeah,
I'm a whole life insurance guy, I'm an investment person. Brr. Like,
yeah,
we think that's pretty dumb. But I think that has a lot to do with the growth. That's what I was trying to tie it back to.
yeah. And a lot of what you see as the strong opinion on the internet, it doesn't really exist.
Exactly. That's the consensus has spread out, and you don't have that sort of, everything being fed by advertising dollars from one segment of an industry.
Yep. There was a question I stumbled upon in Reddit recently from some guy who had bought a whole life policy.
Speaking of dumpster fires,
8 years ago. And he was
Reddit's good and bad as well.
Exactly. He was in a little bit of a conflict with his wife who, wanted to do some things financially, but he felt like we can't really do those things right now. And she looked at paying premiums in the whole life policy as an impediment to.
We could have a pool.
Some of these things.
Not for those stupid life insurance policies.
Yep. And so he was asking
almost like I've had that conversation.
He was asking like, am I the dumb one here? And fascinatingly, a number of people showed up to tell him, no, you just got to stay the course. It may not look great right now, but it will be later.
Yeah.
And you've got to decide, does it make sense to let it do that? Or are those other priorities so significant that you need to cut and run and do those now?
Yeah.
That's up to you. But what you have, even though it probably wasn't the best execution of the idea, it's still going to work.
Yep. I mean, there are times in certain scenarios, not in all, but in certain scenarios that we have seen where, cash value life insurance will work for that situation, but the payoff makes delayed gratification look like instant mac and cheese. I mean,
oh yeah.
It just takes a while. Yep. And it can be really hard committing $20,000, $30,000, $200,000 a year to go to stay the course and hold on. Like, I know how this works and it's going to work, but in the short term, I feel stupid.
It's right. It's just going to test my will.
Yeah.
And my willpower or my perseverance in it. But we also have the vantage point of having done this for a number of years.
Yep.
And we got a lot of policies in force that have existed for a while.
More than
with
10
some people,
years. Yeah.
People paying some pretty large premiums. And now they've got a significant amount of cash value. And none of them are upset as far as I know.
I get positive messages.
Yeah.
I get emails from people. Like, not generally out of the blue, but when we're discussing something, like they had a question about something and I'm addressing it, and they'll sort of drop in, oh, by the way statement. Oh, by the way, like this is great. I'm glad I did it.
Yeah.
It's working out better than most everything else I've done. I've heard, and I don't know how to gauge that statement always, but
no.
Yeah, we hear those sorts of comments
frequently.
Yeah, I don't hear negative stuff.
Nope.
If they have negative comments, they're keeping them to themselves. But
yep. So, life insurance, cash value life insurance is alive and well.
Yep.
And I think the interesting broadening out of options that has come along with more recent technology is the fact that people are starting to catch on more to the fact that this exists.
Yes.
And it is a great diversification play, as we have been shouting from the rooftop since 2011 on the internet. Sooner than that, into the telephones when we called people up randomly and they said, "Who are you?"
Random kitchen tables. We were just
yes.
out there doing it.
Right. Yeah. So that's it for today. Life insurance is great. You should go buy some.
Yeah.
Preferably from us, by the way.
Yes. We do sell life insurance, by the way.
Yes.
Someone sent us a message. Do you guys just talk about life insurance? I see we failed once again.
It's okay. This is what we do.
All right.
Shameless self-promotion is not our strength. And with that, I am Brandon Roberts.
And I'm Brantley Whitley.
And we will see you next week.